Oh, by the way, there was something else that happened with China. So apparently China found, what was it, $90 billion in gold? Did I get that right?
Well, China has hit the mother lode with the discovery of a massive gold reserve in South China's Hunan province. Chinese geologists identified more than 40 mineral veins located less than 2,000 meters underground with a worth of almost $83 billion. Scientists were using innovative technologies, including 3D geological mining, to look for precious metals. They estimate the total reserves in the area to be over 1,000 tons. Now, this comes as gold prices have soared recently and are set to reach record highs in the coming months. CGTN correspondent Sun Tenyuan brought us more details.
Now, Chinese geologists announced they have detected over 40 gold veins with a reserve of 300 tons of gold within a depth of 2,000 meters beneath the Wangu gold field. Now, this site's gold reserve within a depth of 3,000 meters is further estimated to be over 1,000 tons. Now, that's worth about 600 billion yuan or over 80 billion US dollars at current market prices. And Chinese geologists say it's a huge breakthrough, not only just for Hunan, but also for the whole country. Now, the Wangu gold field is the largest gold deposit ever discovered in Hunan's history, and it's been 30 years since the gold deposit was first discovered. Now, even on a national scale, there are only about 5 gold mines of this site. Gold is considered as a hard currency globally and has always been a reliable stabilizer during times of political or economic uncertainty. It's a resource that nations can count on to navigate risks and challenges, whether they're financial, geopolitical, or industrial. So discovering more gold isn't just about adding to the reserves. It's about giving the country greater confidence and flexibility to face a wide range of uncertainties. And this massive discovery at Wangu Goldfield is a big win for China for sure. And like I said, it means more gold to strengthen the country's financial systems, provide economic stability and security, especially in today's complex global environment.
So China is already the world's largest gold producer. And they just literally struck gold
Yeah.
mine. and so I think they found a reserve that's about 1,000 metric tons of gold, which is a lot of gold. and gold is going to go up, right? I mean, the way that U.S. is printing money like crazy. I mean, they're not even printing money anymore. They don't need to print money on paper. They're just like digitally adding a couple of zeros. so I mean, gold is going to be all the commodities going to be more valuable. And it's that's just going to so China is hedging right now. This is why China is hedging against all the U.S. craziness, including how U.S. is monetizing dollar hegemony as a weapon. So recently, China has offered dollar-denominated bonds in Saudi Arabia. So, like, people are like, wait, what the hell is China doing? China already holds a lot of dollars. Saudi Arabia is holding a lot of dollars. So why is China selling bonds in Saudi Arabia? Well, it actually makes sense if you think about it, because the whole U.S. financial hegemony rests on the dollar hegemony, and it rests on petrodollar, because back in the 70s, Kissinger traveled to Saudi Arabia. It's like, okay, we're going to move off the gold standard completely, but we need to back the our money on something. So we're gonna tie dollar and oil together. So you're going to make sure when you sell people oil, they will have to pay in US dollars.
Petrodollar.
That's it birth of the petrodollar. So anyone in the world right now, they need to import energy. They need to buy energy. They have to spend dollars. And all these Gulf monarchies, they're finding themselves like they find themselves end up with an influx with a lot of more dollars than they know what to do with. So what do? Well, they invest in United States, whether real estate, stocks, or US Treasuries. And so that and then you back when US still had manufacture, then they will US will sell Saudi manufactured goods, weapons, etc. to recycle that dollars back into the U.S. economy. That's how it used to work, right? Right now, U.S. strategy is, you know what? I'm gonna bomb. I'm gonna create this. I'm gonna light fire all across the globe. I'm going to touch a war in Europe, in Ukraine. I'm gonna support Israel to destabilize Middle East. So nowhere is safe to park your money except in United States, except park your dollars in US Treasury. And that way you can be used to continue to finance the US military spending, right? It's a perfect scheme. So, China realized what's going on. That's why they have been reducing their treasury holdings, from one-time high of 1.4 trillion. Now it's down to like about 700 billion, I believe.
And, really? They've gotten rid of that much of the dollar.
The treasury. So, but they still have a lot of dollars, right? So they're not buying you. They're getting these. China's getting the dollar from their trade surplus, which is priced in dollars. So they're like, okay, we don't want to park our money in treasury where United States government can just seize our money in the way they seize Russia's money. So they are investing those dollars in Belt and Roads projects. They're using those dollars to finance the building infrastructure, building ports in much of the global south. And what now with their Chinese bond offering in dollars, they are getting the same rate as United States government. So which means Chinese government now can borrow money in dollars at the same rate as the United States government. Think about that, right? So US. So one of the advantage of US before is it can borrow, it can continually borrow money, and people will put their money into the US Treasury bill because it's safe. But now China can borrow money at the same rate as the United States government, and they only did it it's an experiment, so they only offered 2 billion, right? 2 billion, but then it was oversubscribed 22 times. So that's how much demand it is for China issued dollar bonds. So there's a lot of Saudi prince sitting on mountains of US dollars. They want to park somewhere else other than US Treasury bills. Because they also
Donald Trump is coming in and he seems to be hell-bent on China. I mean, is China concerned that they would do something similar to them as they did to Russia, basically stealing $300 billion, or what they did to Venezuela, where they stole all of that gold? I mean, for China to have that much dollars, doesn't it make them vulnerable on some level to the same tactics that were used against Russia? Or am I wrong?
Well, I mean, at the end of the day, they still need goods from China. I mean, as much decoupling you want from China, you can't decouple everything. They still, like, even Raytheon Martin, even Raytheon and Lockheed Martin has said, we can't completely decouple from China because we need rare earth from China, and so that's unrealistic to have a completely decoupling break with in the trade ties. But China they don't expect ties getting better, so they're hedging. I mean, they have been hedging for a long time, and this is why they're offering the dollar denominated bonds. So now instead of all the petrodollar flowing into U.S. Treasury, like what they used to do, what the U.S. economists call a virtuous cycle. Now some of those petrodollars can flow into China, and then China uses dollars to continue to invest in the global South countries, and so now you see like that. It's China is not de-dollarizing, right? China is re-dollarizing, but keeping dollar just as a means of payment, right? Rather than a means to finance U.S. military. and so this is like China is playing Go while US is still playing with checkers. And so this is where I don't think, whatever China is prepared. China is prepared for the coming of Donald Trump, and this is why they're building extensive ties with the global South. That they're expanding massively their footprint in investment in Southeast Asia, in Latin America, in Africa. Now China's number one trading partner is no longer United States. It's ASEAN. It's ASEAN,
Really?
Southeast Asia. Yes. And that ASEAN is a top export market now for China. So they are already like EVs, right? Like 100% or 300% tariffs on Chinese EV, whatever, which is prohibitive. There's no Chinese EV in United States except that one Xiaomi SU7 that was imported by Ford CEO. Nobody can get a Chinese EV in United States. So instead, China is selling them like hotcakes in Latin America, in Southeast Asia. I'm waiting. I'm in Indonesia. I'm waiting for BYD to bring their latest entry level EV to Indonesia, because that thing only costs like between $9,000 to that thing only costs between $9,000 to $13,000. I mean, that's great value.
And
so I'm waiting for that.
And see, that's the rub. We can't compete with that. The rules-based order, and the reason why we're changing the rules-based order, we can't compete with that. Like in the old days, where the U.S. thought, well, we have a higher manufacturing, we are better at producing and better at creating technology and everything else. I think you get a situation where China can build an electronic vehicle that will be built here for like $50,000. I think like Musk, the lowest aspect of Tesla might be like $40,000. And they are building a machine that's just as good, if not better, for $9,000 to $13,000. And I saw their manufacturing plants. The entire thing is automated. Like the entire thing is basically being built by machines, where you can take out a lot of the human labor out of it. No wonder they can build them for that cost. That's why we don't see them here. We can't compete with those cars. I mean, it's astonishing. KJ, thank you for this, man. I really appreciate it. I always enjoy these conversations. You're very illuminating in these discussions, and you help give context to a lot of the stuff that's taking place around the world. Thank you for this. KJ, no. He is Silk and Steel Podcast. Well, he hosts of Silk and Steel Podcast, focused on China, surrounding regions, and the history, culture, and politics of China. You can follow Carl on Twitter at Carl Zhao. You can follow his podcast on Twitter at Steel Silk N, the letter N. And you can subscribe and support his podcast at patreon.com, Silk and Steel. Carl, thank you, man. Always appreciate these conversations.
Invite me back.
Held out. Have a good one, man. All right.